Hey everyone, how's it going? Today I'm going to be talking about why Facebook is a mispriced opportunity today. Funny story first, actually, I was going to brunch in Hamburg this morning and I did not know about this daylight savings thing. I completely forgot about it. And I almost started to give the servers an attitude because I was like, my watch is showing that it's past 12 and they're sitting there 12:40 and they're not basically making any movement to serve us when we sat down. Well, they're really opening in 20 minutes and I was the one being the asshole being there 20 minutes before they're open. So instead of watching Narcos on Netflix, which a coworker suggested to me, so if that's a good show, let me know in one of the comments below. I decided, fine, I'll use this extra hour to explain to you guys why Facebook is a tremendous opportunity. By the way, this video is for educational purposes only. It's not an offer or recommendation to buy or sell any security. Accuracy or completion of this information presented, I don't guarantee any of it, and I'm not responsible for any loss incurred as a result of this video or the material presented. I also may buy or sell any security mentioned in this video. As an additional disclaimer, I do own some Facebook options. So I'm a believer in this kind of view that I'm pitching today. So basically, you guys know Facebook. They're an advertising giant. They derive most of their revenue from mobile advertising. And they also own Instagram and WhatsApp. And what you're looking at right here is the site TradingView, and I've got a weekly chart up. And I'm going to talk about my price target for Facebook in a minute. It's about $200 a share. And it's going to hit $200 a share, obviously, because I'm drawing a line right here. And obviously now this is going to come true in the future, right? Well, it's not that easy. But let me quickly back into kind of how I get to even saying that Facebook is an opportunity today. So it's trading at $145 a share. I'm going to just open up my little Excel file here. And here we can see this is the expected earnings per share of Facebook in 2018. If it grows 15%, which analysts expect in 2019, it would have an EPS of 828. And if it grows another 15%, that would be at 950. Now, Facebook's business multiple, or PE ratio, is currently 22.5. And if you look at competitors in the space, Twitter, Google, Amazon, Netflix, I've listed all their PE ratios here. And you can see that Facebook is a tremendous opportunity at 22.5 from a valuation standpoint. Now, obviously Amazon, people have talked about it for a long time, the reasons why they don't trade off of PE, they're purely focused on growth. But look at Facebook's three really important metrics that I like to look at: their return on sales, their return on invested capital, and their free cash flow as a percentage of sales. This is a terrific business, and so behind every stock is a business, and you have to see how it's doing. Right here I have a chart of their sales and earnings, and you can see over time how their revenue is translated into EPS growth, and also how that is translated into free cash flow growth, which is also very important. So this company is growing revenues, and not only are they growing revenues, that revenue is flowing into their profits and their cash extremely well. So from a business performance standpoint, Facebook is doing outstanding. And you can see some longer term trends in my charts over here on the left. By the way, if you do want this Excel template, I will show you how to use it. Just leave a message or a comment and give me your email, and I'll just shoot an email over to you kind of how to use this template, because I've set it up as a quick data paste from Morningstar using completely free information, and you would just paste something here in A1 and it would automatically populate all these charts for you. This analysis down here, it doesn't do automatically. Anyways, there's a reason why Facebook has been really getting hit hard. First of all, the general market right now has been really suffering. As you know, the S&P has been in a correction mode. And so on this chart, and this is a finviz.com maps and then a bubble chart. And here you can select things on the x-axis and also on the y-axis. And what I have on the x-axis here is EPS growth next year, and on the y-axis I have 1 year performance. So what you'd expect is companies that are showing up really to the far on the right here with really high EPS growth next year, you'd expect that they would be up really high in the 1 year performance, right? So here we can see Twitter is a bit overpriced because their EPS growth next year is only expected to be 13%, but they've grown 60% in share price value. So you might say, there's a bit of a disconnect there. Their price performance is outperforming actually what their business is actually expected to do. So there's a lot of hype around Twitter right now, and I think it's starting. It has a lot to do with basically, actually Trump has transformed Twitter in a way, and how he has used Twitter as his media outlet. But you take away Trump from the presidency, and Twitter is going to be a great stock to watch from a short sale perspective. Anyways, here is Facebook. So their EPS growth next year is supposed to be 16%, and in the last year they've been down 15%. I mean, you have this Cambridge Analytical scandal, you have the hack of millions of users. Someone called Facebook the digital tobacco, which I actually think is a positive thing because, well, it's not a positive thing for society, but for the business itself, it means people are addicted to Facebook, right? And that's pretty obvious. I mean, around the world, wherever you go, you're going to see people on their Facebook, creeping on old friends or, catching up with family and posting their food that they're eating, because we all know you don't get the protein from the meal unless you post it on your Instagram or your Facebook. So people are using it, they're addicted to it, the stock price performance is great, and the shares are just sliding. So this is an awesome opportunity to buy this quality business at a discount. And let me now quickly go again into how I get to a valuation, because I think I went over that a bit too quickly. So here I took the earnings per share estimates for the next 3 years of Facebook, and I applied their current PE ratio of 22.5 over the next 3 years, and then the estimated price is just multiplying those together, the expected earnings with their expected multiple or P to E ratio. So we can see that by 2020 I'm expecting Facebook to be about 214 per share, and it's currently at under $150 a share. So I try to look at things very simply. I try to do a relatively conservative analysis, and then I say, all right, Facebook, I think it's easily over $200 a share. It's currently trading under 150. This is a great opportunity. I understand the business model. I'm going to go ahead and buy some shares. And I think that's where investing becomes a bit more art than science. The people that try to really pinpoint exactly, what their EPS is going to be by quarter and really pinpoint things, you're basically falling into a trap, because you're going to be wrong on so many levels in your analysis. I try to just think about the big picture, and if it's a business I understand, like Facebook, I have a lot of confidence that they're going to turn it around here. So, let's see, what else should we talk about? Yeah, I've told you about the stock views. This is a great technical free trading chart software. So you can look at a 1 hour chart, you can look at 1 day chart, you can even go into the 5 minutes if you're actually executing a trade. Sometimes you want to go into the 5 minute chart. And here I actually use the 5 minute chart when I'm placing a trade, and I use a public indicator. So if you click right here and you go to public library, there's these indicators that people have made, and you can see the ones with most likes here. This Chris Moody guy has made this one called CM Williams VIX finds market bottoms. That's what I'm showing below here. And basically I buy when this indicator is very high. So you can kind of see how this is working here, and how this would have been a perfect buy point on the 5 minute chart for Facebook. Even though it did come back down, your buy signal was still very much correct. And if I look at the weekly chart, you also have a very strong technical reason to buy Facebook. It's showing, according to this indicator, it's showing a high likelihood that the trend is going to start reversing here. And so not only did I find a fundamental reason to buy Facebook, this is also supported by a technical reason, which means you've got the technical, whenever you compare the technical and the fundamental reasons, I mean, that's a really strong argument to go ahead and at least initiate a position in Facebook. Now, they do report earnings on October 30th, that's this Tuesday, and a lot of people have basically built a lot of negativity into the next earnings report. So I'm actually bullish buying before earnings or after earnings because, again, my price target is up here of $200 a share. So even if their earnings report is bad and shares drop more, I'm going to get excited because I still place Facebook's business value much higher than the current market is trading at. I'm actually a bit surprised how much the market is not giving Facebook credit for right now and how bearish people are becoming. Because again, if you look at the actual performance metrics here, I mean, Facebook has been crushing it. Even if they start to trail off a bit, they're still doing extremely well and their multiple is not very high. So, long story short, Facebook's an awesome opportunity today. Leave some comments below what you think, what stocks do you think are a good opportunity today, and hit that subscribe button because I'm going to be sending out some more quick videos on good businesses that are trading at a discount today. Thanks for watching.